Hello there and welcome to Mind Your Business. I'm Jennifer Anderson, host of the show, also the Executive Director of the Georgina Chamber of Commerce. Well, it's certainly a very interesting time, and we've been saying that for months now with the pandemic. We are currently in the stay-at-home order. This show is being taped on May 11th. So, as we tape this show, there is indications that a stay-at-home order will likely extend past the 20th. There's talks. The Premier was in talks yesterday, and we expect announcements over the next couple of days about whether that date is going to extend or not. But certainly we know that we will not be going back to normal. There's lots of different colors as part of the framework. There's lots of different situations and scenarios as we head into the next few weeks and months. But over this time, regardless of whether we've been in a stay-at-home order or a different color as part of the Ontario framework, businesses have been struggling. They've been feeling the effects of this pandemic. They've been feeling the effects of opening and closing and feeling the financial restraints. And so we have brought on somebody on this episode today who has a wealth of knowledge, and yes, pun intended. David Noronha is joining us. He is the Vice President of BDO Canada Limited, and we are thrilled to have David back on the show and to be able to kind of delve into all of those financials. Hi, David. Welcome.
Oh, thanks for having me back. I appreciate it.
Long before my chamber hat was on, I was doing interviews with you. I've talked to you for the last probably 10 or 15 years, talking about debt, talking about financial recovery for individuals and businesses. And I think it's a good discussion to have at any time, but especially now as those businesses are feeling the effects.
So very, very true, especially in this day and age, because there's so much uncertainty out there, so many things that nobody's really aware of, and it's putting a lot of pressure on businesses, small, medium, mid-size, even sole proprietors. And we're fielding a lot of questions these days from people about what they should be doing, what they can be doing. Have they done what they should have been doing? Was it the right thing to do? So a lot of questions. And, we welcome people to contact us with those questions because we want to make sure that they have as much information and, most importantly, the right information so that they can help assist them with, whatever decisions that they have to be making, because it is an extremely stressful time and we're extremely cognizant of that. So we want to make sure, even if they've got a bookkeeper or an accountant or even a financial advisor, sometimes it's really hard to understand the debt and credit and the insolvency issues that may play a role in their decision-making process. So from that standpoint, we want to make sure that they talk to the right people to get those answers to those questions.
Right. So you are saying we, and by we you mean BDO Canada. Tell us what BDO does.
So BDO Canada Limited is an arm of BDO Canada, the accounting firm. We're probably the fifth, if not sixth largest firm in the country. We're part of a global network. So traditionally, we do have the accounting services, audit and tax, but we also have a lot of specialty areas, wealth management, succession planning, business advice, HR services. So we really do provide a lot of different services. I specialize in what we call the financial recovery services group, so specifically dealing with insolvencies, debt and credit, and we've been doing it since 1958. So we've been around for a very, very long time. We've seen all the ups and downs that this economy has gone through, all the recessions, and depending on who you ask, there could be anywhere from 3 to 5 recessions that we've experienced since the 1970s. Currently now we're dealing with probably the toughest economic streak that we've probably ever had to deal with right now in this pandemic, with the amount of money that's, being afforded to people through the government aids and the various programs and the confusion that's created by that to, people just trying to hang on and survive, not just as a business owner, but even as an individual, because if you're just an employee, are you laid off? Are your work hours reduced? You talk about industries. You've got the restaurant business. All the servers that are out there that don't have a restaurant to go to ply their trade. What are they doing? So it's really, really tough. And we understand that, and we want to make sure that people get the information to hopefully make the right decisions to help them survive this pandemic that we're all dealing with.
Well, and that was my next question. You mentioned the 3 to 5 recessions. You've been through a lot of different situations and financial ups and downs. How has this pandemic compared to other situations?
Well, it's really hard to compare them to, because each one is really unique on their own, much like when somebody comes in to talk to us, your situation is your own. And, go back to last January, the insolvency business was, ticking along as it normally does. Nobody anticipated this. We heard rumors about, this flu virus that was coming out from, over in Asia and stuff like that, but nobody had any idea it was going to be this severe and this problematic. And even when it started, everybody was saying, you guys are going to be so busy because so many people are going to be struggling and having problems, which they are. But what they couldn't predict was the amount of aid that was going to be coming from the government, and the amount of financial assistance, not just to individuals, but also to businesses, which is really great for the businesses, and it's welcome from that standpoint. But it's not an endless stream. It's going to run out at some point. So when it does run out, what are you going to do then? So what we're trying to have people do right now is take a look at their situation and say, this is not going to continue. If your situation doesn't change when that government assistance runs out, what are you going to do? Because the time to sort of anticipate or prepare for that is now, when things maybe are a little bit more manageable, versus when ultimately the funds do run out. What do you do then? Because then we're going to say there's going to be an onslaught of business failures, shutdowns, bankruptcies, consumer proposals. Right. We just don't know when that's going to happen. I mean, the analogy I always give when I get into conversations with people about this is I could predict the future. I could tell you this pandemic is going to end on this date, but I just don't know when.
Right. So I would love that.
I think all of us would love that. Get back to doing the things that we are like to doing, and makes us appreciative of all the things we kind of took for granted. Right. Because when I talk to the professionals out there, whether it be lawyers or other accountants or financial advisors, they go, "When is this going to happen?" I go, "I don't know." But my biggest fear is this. People are moving along right now and surviving based on the fact that they're not being harassed by the creditors. They're being able to take advantage of the deferral payments, which is great. And if you do that, just be cognizant of whether or not you're being charged interest while your payments are deferred, because that adds a debt load to you. The low interest rates, the craziness with respect to the housing values that have gone up and people relying on that, which I completely understand. But at some point, that's all going to stop. What happens if interest rates go up? What happens when the government funding runs out? What happens if there's a housing correction and the value of your house comes down and now you might be over leveraged? So there is a cliff out there. We just don't know 3 things. How far we are away from that cliff. Right. How steep that cliff is, because if it's 10 feet tall, we're okay. If it's a mile tall, it's going to be a bloodbath. And what is the angle of that cliff? Because if it's 90 degrees, it's going to be really messy. But if it's, an incline of 45, maybe we can kind of ride it out. But we're going to get to there. The thing is, nobody can predict that when's going to happen. And what is that going to do to our economy? I have no idea with respect to that. So we're just trying to make sure that people have the right information so that they can prepare for that. And if they have to do something now, great, we'll help you go through that process so you're in a better place when things do sort of emerge from this. Or you have the right information so when you have to make that call down the road, you're prepared to make that decision, or at least put things in place so that you're prepared for that moment to happen. And hopefully it never does. Right? Yeah, but certainly we know the other variable is we don't know how people will act or react. And I'm sure you've seen that over the years. And
it's whether people are taking this opportunity to save. People are taking the opportunity to take the relief, but not thinking about the future and how they're going to spend it. So you have all those different variables of how people are in terms of their spending. And we can see by statistics that people don't tend to save, they tend to spend and tend to be in debt. So this could be another variable that we just have no idea.
And that is a really good point, because it is a concern, because we are paying attention to the statistics, the trends, and our debt to income ratio hasn't really changed, hasn't gotten much better. So what we were hoping to see with the people not filing as many insolvencies as they are right now because of all the assistance they're getting and the money that hopefully that they're saving, is they're not using that to pay down their debt. They're maintaining their debt at the same ratio, or gosh forbid that they're adding to it. So their situation is actually getting worse, but they're not really feeling it for all the reasons that I just mentioned. And that is the scary part, because a lot of us, and if it's not in front of us, we tend to ignore it, or we tend to push it off to the side because it's not front of mind right now, because quite frankly, we got a lot of the other things to worry about. And I completely get that, because right now it's a question of what is the most important thing to you. For some people, it's staying healthy. For other people, it's looking after their family. For other people, it's seeing other family members, whether it be your children, your grandchildren, your parents, and looking after them. You're worried about your mental well-being, which is really important as well. And mental well-being ties really well in with financial well-being, because they almost kind of go hand in hand. So it's a question of what do you put first? And to me, when I get asked that question, I go, you have to do what feels right for you, but you got to make sure that when you're making that decision, that it's based on sound facts and logic, as opposed to, I want to feel well now, but at what price? Is it going to put you in more trouble down the road? Well, is that really something that you want to do? It's probably not the best idea. So maybe you can do a few things right now. Instead of feeling super great, you can feel a little bit better, but that that feeling is going to carry through down the road. And that's what we want to make sure of, is that people put themselves in a better position, so that hopefully when they have to make the tough choices to, deal with their debt, that they're able to do so.
You mentioned insolvency is down. Is that surprising to you at this point? Oh,
immensely, because again, what we thought was with, the businesses struggling, the economy struggling, and people either being laid off, having reduced hours, that they weren't going to be able to manage their debt. But then comes the government with their assistance, which is great and extremely welcome, because they're propping up individuals and businesses, which is the right thing to do. But it's also giving them a false sense of income, in the sense that it can't continue, because the more assistance they give, the more government debt that we're going to have to carry. And, this is not a conversation for, who's going to pay that debt load down the road. But, now that you've got the ability to deal with your debt, so maybe now file to put that debt away, so that when you come out of this, you're going to be debt free. But people aren't doing that. As you pointed out, they're using it for other purposes. And maybe there's a valid reason for that, because remember what I said is everybody's situation is different. So your neighbors, yours, your family, your friends, everybody is facing different little things that maybe make their situation a little bit different. So people are holding off doing that right now because they don't feel the absolute need to do so. So year over year, I think Ontario is down by about 25% in the number of people that have filed on this. If you go month to month, the month of May was actually down by almost 50% from the year before, which was really extreme. So it's happening all across the country, and you see little blips here and there of, little rises, little spikes here and there. But again, it's hard to tell what's ultimately causing that, because again, with the next round of assistance, is it holding off the ultimate filing? Again, we don't know at this point. So, we know that there are people struggling out there, but again, nobody is pushing them, because typically when somebody is struggling with debt, what pushes them to the edge? All negative bank balances. Well, if the government's giving you money, that's keeping that going. You're getting phone calls, harassing letters from collection agencies, your creditors and stuff like that. They're not being as aggressive. Even when the banks agreed to defer your mortgage payment, that was always a biggie, right? Saying, because I need a roof over my head. Well, now the bank's allowing me to defer my mortgage. Well, then I don't have to make that large payment, which typically is your largest expense every month. Well, now I don't have that, right? So now I can use that to address other needs or other concerns that I have. So, we get all of that, but sometimes what we're seeing with the people that we're assisting now is that they haven't looked at their whole picture. So they're just kind of taking little stopgap solutions as opposed to addressing the whole concern and addressing everything at the same time, which is what I think they need to do, because it's like the old dam that's starting to leak. You've got, little holes here and there. So you plug your finger here and here, but you've only got 5 fingers, well, 4 plus 2 thumbs. But what happens? You've got 20 holes. You can only plug 10. The other ones are going to start leaking. As they start leaking more, maybe you'll put a finger in that one, but then you've just left the other one. At some point, that dam's going to crack and it's going to break. It's just, we just don't know when.
I love your analogies. And visually, they are easy to understand. That makes sense. And as I mentioned off the top of the show, you and I have talked for many years about debt. And when you have somebody who is not good with dealing with their money, who's now been put into this situation, it just exemplifies, the entire situation. Yeah, and that's going to be a struggle for people as well. You've talked over many years about teaching people how to get control of their finances, to be in charge, and so, this is a great time where any time is a great time to start, but certainly this is a difficult time as people are scrambling.
Yeah, even now more so. And, whether we're in this pandemic or not, the one thing we've always found is that if you are in financial trouble, it's not an easy topic to address for a whole bunch of personal reasons. And I'm not going to get into the psychological analysis of it. It's just not fun. That's really the best way to look at it, because nobody wants to deal with an issue or a problem because they know that there's going to be tough decisions, and it's human nature. But if I can go do something else that isn't as troubling or as frustrating or annoying or sad or depressing, then I'm going to go do that other thing and put the problem away. Well, we all know if it's a problem, it's not going to go away. It'll stay. And in some cases, especially when it comes to debt, it's going to get worse. So we always, encourage, if you see something, the best time to do it is early on when it's not a huge problem and it's going to be easier to deal with. You'll have more options. So if you've already done that, that's great, but you still have to pay attention to it. Just because you've looked at it doesn't mean you put it away and never look at it again. You have to continually go back and look at it and address it and make sure you're still doing the right things. If you haven't, start now. Don't wait, right? And even if you don't think you have an issue, it never hurts to look at it and go, am I doing the right things to make sure that maybe I won't end up there? Because that's what financial advisors tell you to do all the time. Don't trust me to tell you everything that's going on. Look at it and make sure you know for yourself. Well, when it comes to debt, a lot of people just simply don't understand or don't know it. And then they try and deal with it. They get frustrated and then they put it away, or they go and they look for answers on the internet. And sometimes they aren't the right answers, but because they've read it on the internet, they think it's the right thing to do. And in some cases it is, but unfortunately, sometimes you're dealing with somebody that isn't certified, hasn't been, professionally designated to give you the right information, which is why we call ourselves First Call Debt Solutions, because we want you to call us, because we are the people that you should call to get those answers to those questions. And the thing I always stress when I'm talking to individuals, and again, whether it be a professional or not, I just actually got off a call with an accountant this morning saying, when they speak to us, it's confidential. They don't have to worry about information flowing out there because it doesn't happen. And we don't charge them a fee for them to ask us the questions, for us to spend the time with them to review their situation and provide them with that information. So at least after that meeting, whether it's 30 minutes, an hour, however long that it takes, you have hopefully most of the information you need. And especially when it comes to me, whenever that meeting may end, I'll go, if you have follow-up questions or if you want to talk about it more, make a phone call. If I'm free, I'll talk to you. If not, leave me a message. I'll call you back, or send me an email, right? Because I will always follow up with you to make sure that you've got the right information to make the decisions. And if you get to it early enough, the information is there and you don't have to file a bankruptcy or a consumer proposal. That's where I want people to be at. Not, I've tried everything under the sun, I'm now going to call Dave and then I have no other choice but to file a bankruptcy. Well, if you'd called me sooner, maybe we could have avoided that whole time frame, and maybe we could have saved you some money, saved you some assets, but you went the other route, and unfortunately those things have been sacrificed and now we can't get them back.
Right.
So the earlier you call, the sooner you get the right information, and hopefully it gives you greater options to maybe avoid having to do something that you don't want to do.
The right information. That's critical. The most important piece. Can we talk about the elephant in the room? And that is the fact that, there are businesses out there who are not struggling during this time. There are businesses who, and we see it at the Chamber of Commerce, where they're very low key and very respectful to other businesses, but their sales are, 40% higher. We had one tell us 40% higher week after week over last year.
Right.
How should those businesses be proceeding during this time?
Well, it's like anything else. They probably didn't anticipate that happening. So it's like your peaks and valleys that all businesses have for the most part, right? So now you're in a peak and it's unexpected. The thing is, when it comes to that sort of scenario and I tend to be extremely conservative when I'm talking to people about that, is you want to maybe set aside the majority, if not a significant amount of whatever additional revenue you have, because at some point there's going to be that correction. So much like, when people are down, hopefully they're going to come back up. People that are up, ultimately are going to come back down again.
Right.
It's whether we're in the pandemic or not, whenever you have a good year, sometimes businesses get overly aggressive and they don't plan properly and they expand beyond belief, and their capital expenditures are huge, and they prepare for either maintaining that level of business or even greater revenue in the future, and it doesn't happen. And now you've got all this additional debt that you have to carry because you thought it was going to be there and you don't have the revenue to service it. So again, you do the exact same sort of analogy. You plan out, or you map out, what my favorite term is with the other people at Rogers TV that know, is budget. I am all over budgeting, whether it be a personal budget or a business budget, which we call a cash flow. Is what do you think it's going to look like? But you don't just prepare one cash flow. Again, whether you're struggling or whether you're doing well, you prepare different cash flows based on different scenarios. So using your example, if you're having a great year, okay, prepare a cash flow, assuming that maybe you will continue on this trend, and maybe plan for that. But do one, what happens if you go back to pre-pandemic revenues? What does your cash flow look now? And if that happens and you spend under your first scenario where you think it's going to be the same, is it actually going to put you into trouble? So maybe you want to do one in between the two and hope to heck that you can adjust accordingly as you move along. So that's typically the advice, because, I had a really good talk with an accountant the other day, and he said, I've got customers that were in business and they made all this money and they just spent it, and they didn't prepare for a downturn, and now the downturn happened and they can't survive because nobody predicted the COVID scenario, and a lot of businesses were doing fine before March of last year. Now they weren't ready for it. They didn't plan. It's like what we call the emergency fund for an individual. Right. Set it aside. Hopefully it's enough to carry you through. And in this case, nobody would have set aside an emergency fund for more than a year, because you couldn't predict this. The ones that did, great, they should be fine. But the ones that didn't, now they're struggling, or hopefully they can make enough changes to their expenses to maybe ride out the storm a little bit. But again, prepare for the fluctuations is always my advice when it comes to businesses, when it comes to, good times versus bad.
Well, and this is a business show, but that certainly can be applied to individuals, because, for a lot of people, they aren't spending gas money, and, their takeout and their vacation and their sports fund and all of those different funds have been redirected into hopefully paying off debt. And, so learning best practices now moving forward when we return to somewhat normal will be a great advantage to people. We have a few minutes left. I know you mentioned the key takeaway, start now, right? So what are the tips for people moving forward, whether an individual or business?
Well, I always say know your numbers, in the sense that know what your revenue is, and if it's this now because you're getting government aid, if the government aid runs out, what is your revenue going to look like without it? And are you going to go back to work to replace that? So again, much like the previous discussion about having budgets and expenses, plan to spend your money in that fashion based on what your revenue is. So like you said, if you can live with a little bit less now, if you can maintain that, then you should be fine if your income doesn't stay at the level that it is because you've learned to live with less. Just because your income goes up doesn't mean you should go right back to spending more. Now, some of it is unavoidable because you may have travel and all that additional expenses, but know your numbers. So prepare a budget for yourself. It's really, really important, whether in good times or in bad, because then that gives you the roadmap of what you should be following. And hopefully when things happen, you can then make adjustments because you need some sort of guide in order to help you make those tough decisions. And when you have that map, those decisions aren't as tough as you actually think that they are, because you've got a little bit of guidance. It's like getting lost. If you've got a guide, hopefully you won't, but if you don't have one, you're definitely going to get lost. So pay attention to your numbers, don't ignore them, and if you need help, get the right help.
Yeah, I agree. And I don't know whether you've seen that gum commercial right now where, people are flocking outdoors and gathering and kissing, and they're just excited for, is there going to be a trend of, maybe not so much that, but people, getting on planes and, expenditures and meeting and gathering and events and all of those things that they can get to. It may kind of increase for a little bit before it gets back to a normal situation as well.
I hope so. I really do. It's one of the things we miss. We miss meeting with our clients directly. This forum is great because at least you get to see who you're dealing with. But,
right.
I know like you, when you do your interviews, you'd much rather be sitting 6 feet away from somebody in person than doing it this way, because that's human nature. Unless you like living alone and don't like meeting people, it's really not a lot of fun. And I think that's part of what you and I like to enjoy a lot, is that dealing with people and helping people, and that to me is the part that I miss the most.
Well, then let's plan that. The next time we meet, it'll be in person. It'll be in a studio, and we can sit, even if it's 6 feet apart. We can
I'll take that. Discuss. Absolutely. Yeah.
Thank you so much, David, for all of the information you've provided, for being on the show today. We really appreciate it. And to the folks at home, thank you so much for watching. Of course, you can find previous episodes of Mind Your Business on the Rogers TV YouTube channel, and you can search by topic as well. Thank you so much for watching, and we'll see you next time on Mind Your Business.